You may have noticed that prices are going up on just about everything. And if you've been listening to companies talk about these price increases, you've probably heard a lot of crying. Woe is me! We have no choice but to raise our prices. Our labor costs are going up. Our inputs. But that's a lie. Here's the truth about inflation. Companies love it. I'm going to tell you why, show you how they benefit, and explain why it is that we're seeing such wide-ranging price increases right now. Inflation isn't something that just happens. People make it happen. When companies make statements about their new higher prices to the public, they frame it as something they have to do. Like here, when PepsiCo CFO Hugh Johnston told Bloomberg the company was raising prices to deal with inflation. But in reality, companies aren't being forced to raise prices because of inflation. They're raising prices because they can. I know this because I've listened to company earnings calls, like this one.
Building on the strength of our brands, we are thoughtfully executing tailored price increases.
And this one too.
We expect to continue delivering positive pricing even though we are lapping strong mid-single-digit price increases in the second half of 2020.
You see, when companies talk to investors about prices rising, they make it clear that this helps rather than hurts the business.
So we view a little bit of inflation as always good in our business.
To be sure, firms around the world are absolutely facing rising costs for materials, labor, and more. But they're raising prices by significantly more than that. We know this because of net margins. In layman's terms, net margins are the percentage of profit that a company earns from every dollar of sales. Over the past year, companies' net margins have risen to record highs, and net margins are expected to rise again over the next year. In fact, analysts are expecting companies to deliver record margins this year, as in the largest gap between companies' costs and their profits in history. And at the same time, economists and stock analysts are also expecting inflation to steadily decline. So firms are expecting to keep raising prices, even though the price increases they say are forcing their hand are slowing down. Naturally, corporations love this because it fattens the bottom line, and data show how they're using these record profits. They're buying back stock to push their share prices higher, and they're giving raises and bonuses to top executives. But why is it that companies can do this? Doesn't our Economics 101 textbook tell us that when companies raise prices, smaller, more efficient firms step in, disrupt their business, and steal their customers? Well, yes, but while Congress has done a lot of talking about updating US antitrust laws, the past 30 years has seen weak policy from the government and a massive concentration of companies. 75% of all American industries have become more concentrated in the last 2 decades. That means there's just less competition out there, and big companies have more influence. And thanks to the coronavirus pandemic and the Federal Reserve, large corporations have another leg up. In March 2020, the Fed announced it would buy unlimited US Treasury bonds, as well as debt from American companies, including those with junk credit ratings. That allowed big businesses to borrow money for incredibly low costs, the lowest in history for many. Because investors knew the Fed was purchasing corporate bonds to steady the market, they were willing to buy just about anything. That led to companies issuing a record amount of debt and using the money to shield themselves from competition. Small businesses, on the other hand, who aren't large enough to issue debt on public markets, found it exceptionally difficult to borrow money. Banks tightened up their credit standards, and commercial and industrial lending plummeted. So big corporations loaded themselves up with cash that they could use to push smaller competitors out of the market, or buy them. And just like that, there's a lot less competition to worry about. Now, conglomerates like Kimberly-Clark, Procter & Gamble, and Unilever can raise prices and feel confident that customers will keep paying. Nearly 100 of the biggest US publicly traded companies booked 2021 profit margins that were at least 50% higher than their 2019 levels. That was a big part of the record retail sales numbers we saw last year. That and customers panic buying because they were expecting prices to keep going up. So the next time you hear about a company raising prices because of inflation, know that it's actually the other way around. Companies are raising their prices, and as a result, inflation's probably going to keep rising. If you enjoyed this video, hit the like button And if you're interested in markets and want to watch and learn more, subscribe to this channel to keep up with my latest. In the words of the mighty Mos Def, time is money and money is time. Ain't a dang thing free, so I gotta get mine. That's it for now. I'll see you next time.